let's talk a little bit more about supply and demand. At least you can try to understand it a little bit further, because some of the information I don't think I have shared them in my previous videos. So in this video, I'm just going to be raw and explain just everything. We're not going to do some backtesting, but I'll show you some examples and situations in the market on how to learn them and even think out of the box, so that at least you can try to understand. This is based on my informations and findings, so you can go and do your own research. So it's fine, but at least you can learn something from me, because we all want to benefit from the market. That's all. And I'll also show you the tool that I have been using from Flux chart. So let's begin with the video. So in this video, I want to show you the supply and demand. This is the basics here. Most of the time, if you see a strong bullish candle in this situation, a strong move to the upside like this, after we have this bearish candlestick, that means we are creating what you call a demand zone. And the demand zone will be drawn on the high and the low of either one of the two candlesticks here. So we are going to draw the zone like this. This will be your demand zone. So on demand zone, we will be looking to enter the market to the upside. All we are looking is to enter longs only. Okay, so when the market retraces back to these areas like this, when the market retraces back to this area, this is where we should be looking to go long. The same applies on the supply zone here. We will be looking to go short. And to understand this very clearly, you have to at least understand the concept. You have to understand the concept first, so that you can understand everything. So let me remove this from here. And another thing that I want to point out is that we don't use usually the last candlestick. We usually it's something like this, guys, if I may say. We know a bearish candlestick is a move to the downside like this. It's a move to the downside. But then, what if we have a bullish move to the upside like this? We have a bullish move to the upside. That means right now, this area, because right now we can see that we are not trading to the downside, this area will be our demand zone, because the price section that is telling us that the market is moving to the upside is very bullish. And you will see those strong candlesticks here that are very quick to the upside after we have a bearish move to the downside. I hope I am clear on that one. The same thing will apply in this area. And another thing that I want to point out is that it doesn't mean we should have one bearish candlestick here. If let's say right now we have 1, 2, and 3, our demand zone will start from the bearish momentum, which is this candlestick. This will be your demand zone. But let's say right now we have something like this. That means right now our demand zone will start from the first candlestick, which is this bearish candlestick right here, before this upshift. Even if we have so many bearish candlesticks, as long if we have the price action that is pushing to the upside, then that means that demand zone is valid. And another mistake some of you might make is that, let's say we have this move here like this, and then we have something like this. Let's say, okay, let's do something like this. I want to show you something you'll understand maybe clearly. We have something like this. This is not a demand zone. The only thing that is active in this situation is the supply zone here, because we have a strong move that is breaking the bullish momentum, and there is no space in between. But the problem here lies because if we draw the demand zone starting from this area, from the starting point here, that means right now we don't have an active demand zone, because this candlestick didn't break this area here without even being bearish. I hope you understand what I mean. So that's the only thing that you need to understand from here. So to validate a demand zone, we have to see that price action is breaking to the upside very strongly. So let me fix this so that at least it can be clean. We will have something like this, This will be our active demand zone, because this price action is breaking to the upside. The same thing will apply on the supply zone. So even in this situation, we can see that we see a consolidation here, but then if the market breaks to the downside, we will have a supply zone around this area. Even in this side, we will have a supply zone around this area, only if this candlestick is the one that breaks to the upside. This is what we need, a strong momentum to the upside before we can validate an active or validate a true supply zone or a demand zone. So if you understand this concept here, it's going to be plainly simple when we move forward. So let's move on to the side. You can clearly see that we have two perfect examples here. Then from here, you can clearly see that even if you draw a trend here, we move into the upside, we move to the downside, and then we move to the upside. You can clearly see who is in control here. Price tried to move to the downside, but it failed to move lower, and then we push to the upside very aggressively. It goes to show that there are so many people in the market who are willing to buy that asset. So that's the only thing that you need to understand. But if you are lazy to draw those zones, guys, you can still find an indicator on Flux chart. This is an invite only. You can find the indicator, which is the supply and demand. Here, if you click it, you'll find everything. You'll see that on the market, you'll have those kind of supply zones in the market. You can clearly see that it has drawn those supply and demand zones, but you have to tinker with the settings before you can put this on your chart. These are the settings, but right now, the only thing that I want to do, I like to change the most on this kind of indicators is the settings like zone invalidation, but this ones, sometimes I just keep them as default because I don't want to change so many things on the chart. Here on the time frame, I just put it to chart, so it's fine like this way. So to understand this very clearly, if you look, this is gold on the 5 minutes time frame. To understand supply and demand zones, here on the indicator, it goes to show that it has drawn the supply zone, and we can see clearly that price reacted to this area. And also another thing that I want to point out is that if you want this indicator, you can find it. The link will be in the description below, or you can visit their website here. If you use my coupon in the description below, you'll have a discount here. So I guess let's continue with the video. You can find all the links in the description below, and also follow me on Telegram and Discord so that you can find value in the information that I share every week. So let's continue the video so that we can understand supply and demand zones. So to understand this very clearly, here we can see that we have a series of bearish candlesticks. There is no bullish candlestick in between this area here. So that means this area was very, very strong to the downside. So that means this whole area here and this area here, we created what we call a rally. This is a rally to the downside. So to find a perfect supply zone in this area from the move to the downside, we have to really identify the low of the bullish candlestick and then to the high. This will be your supply zone. So for in case if price decide to come to this area here, that means you will be looking to go short. And plus we have a fair value gap around this area here. You can see we have a fair value gap, but the main problem is that price also created these two highs here. So from these two highs, basically that means if I wanted to take this trade in this situation, I'm just making an analysis. You might even get this very late because I still have to do other things. You can clearly see that we have another fair value gap in this area, which price is trying to retest at the moment, and we still have another fair value gap around this area. So if price retests this area, that means we can be looking to go long, and we still have another demand zone here. We have another demand zone right there because we can see we have a bearish move to the downside and a sharp move to the upside. Right now price is looking like it's consolidating in this area. You can see price was just choppy, so that means right now we can look for a long position if price come to this areas here, but only price action will tell us. Even if you're using any indicator or whatsoever, you have to at least confirm your entries. Don't go blindly on every indicator that you see in the market. So right now I want to show you another example on how you can spot supply and demand zones. You can clearly see that if I give you some tips and advice, is because right now if you use any supply and demand zone, I like to use them with, like, let's say we have a demand zone like this. If we have a demand zone, let me draw it. Let's say price was just consolidating, break the high like this, and then when price reaches this area, I like to see some sort of a fair value gap on this area. I have to identify a fair value gap in this area, and then another thing that I can do is to find where price is likely to break any low. And another thing, lastly, I will confirm my entry here with price action. If not, that means I'll have to wait. And sometimes when price breaks this kind of lows here, they like to come back inside. I hope you understand what I mean. So FVG plus, sometimes it can break even the demand zone a little bit, but price will come back inside. Only if price action will always tell you that no matter what you do. Even if we look at this example here, we can see that we had a strong demand zone here. But when we reach this area here, we can spot a bullish engulfing candlestick. We also have a rejection candlestick here after a bearish engulfing candlestick. This one is a perfect setup. And if you look at the price action here, you'll see similar things. Let me turn this off so that I can explain to you guys. You'll see similar things. If you look closely, we have this bullish engulfing candlestick to the upside. Let's draw something like this. But then the next candlestick is bearish and is also pushing to the downside. That is why you see a move to the downside. After every bullish engulfing candlestick, if price close on the next candlestick, it closes with a rejection candlestick, the market is likely to reverse. It's likely to reverse. It happens most of the time, like a lot, like maybe let's say 40% of the time. It happens even on this area here, and don't forget we are still on the strong demand zone around that area. Here we can see a bearish engulfing candlestick. It engulfs this bullish candlestick with a body, you can clearly see, and then followed by this rejection candlestick. So if you were to take this trade, that means you are going to go long on the close, put your stop loss below and add some spread size and target either another supply zone around this area. You can see we have a supply zone here, but on the supply zone, there was no confirmation entry here. So that means you can still close your entry around these levels before the market can shift. So this is the only thing that I wanted to explain to you guys on how to understand supply and demand. Pretty much it's not something that is very difficult to understand, but if you are new, you just have to like at least try. If you are new, I can give you a piece of advice here. If you are new, the first thing that you can do is understand how to find a bullish or bearish engulfing candlestick. This is the first thing that you need to identify if you are still a beginner on how to identify them. Then the next step, after you have accomplished this first step here, then on the second step, you are going to understand how to find those supply or demand zones using a combination of candlesticks like this. What I mean by combination is that it's something like this. Let me show you. What I mean by combination is that you will find this areas here, like this one here. This is a combination based on this candlestick and this one right there. That is why you see there's no bullish candlestick in between. So this move and this move, you can see the stronger one is to the downside. So that means every move that is coming back to this area is just a pullback. Then that is why you see the market moving to the downside. Sometimes, yes, it can be one candlestick. Sometimes it can be like a lot of candlesticks. Even on here, we still have the same thing that applies. You can clearly see that we have a bearish engulfing candlestick. And as I said before, if you see a bearish engulfing candlestick plus a rejection, the market is likely to push. It's likely to push. It happens a lot of times. I've seen them a lot, but this one has failed here because there's no structure. If you look closely, like as I said in the beginning of the video, I wanted you to think outside the box. Let me show you something. The first mistake that you can do in this situation, you can clearly see that here there's a small fair value gap. Let me say there is no fair value gap. Even on here we have a slightly smaller fair value gap. So you see a bullish engulfing candlestick plus a rejection, you think the market is going to go down. No, price was just trying to show you that I want to fill in this gap before I can move to the downside. You have to fill at least one gap before the market can move to the downside. Like use fair value gaps plus supply and demand. That will be a perfect combination to understand how the market is likely trying to move in those kind of movement in the market. So this is pretty much easy, but if you have any suggestion or anything that you want to talk about, come to our Telegram or Discord, ask me a question. I'm a human being. I respond to every text on Telegram every day. So stay tuned, stay safe, subscribe to the channel, always use a stop loss.